Hello, traders. It is 8:03 a.m. Chicago time, 9:03 Eastern on Friday. It's Friday. The 21st of September, 2018. Thanks for joining me again this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. It's quad witching Friday, expiration today across several different assets, and the expiration of options on the S&P minis for those who trade those occurs in about 25 minutes. Generally, there's an upward skew to statistical seasonality, if you want to call it an upward skew on this day. Just same old. It's likely to be relatively quiet, assuming we don't get a tweet storm coming in. But that's really the first caution I'm going to put out there. Overnight, we got a bunch of numbers, but we do get PMI services prelim at 9:45 Eastern, expecting 55 for September, and that ends that. If you're on Eurex, those products expired, and you should be trading the front month. You don't have a choice. This morning, they don't do a rollover; it just stops, and so you have to roll ahead of time on your own. There isn't like a rollover period or anything, at least officially. So anyway, so that's where we're at. I'm going to get right to it and take a look at where we expected things to head yesterday and where they did. The green line is, well, let me turn down my news feeds here. This guy's screaming. The primary scenario is the green. It shows us pulling back to around 29, 22, 25. But really heading up through 30 and 32. Those are my key targets yesterday. And pushing through there and up. The secondary was an early test of that 30-32 and an impulse down, which brings us back into the gap zone and down into 29.20. Scenario one clearly worked out. In fact, these measured moves, if you receive the master levels, these pink bands, these measured moves, essentially listed out, capped out what was going on. Now, I'm not claiming that there's some magic here. I'm not. It's really random. But yesterday, the pullback to 26, 27, 25 was a measured move, and the entanglement at 29.33 right here was the middle of the measured move. And then we ended up spending some time here, moved up, and we moved right into the next measured move up. And so I use measured moves. They are fib extensions, projections of prior swings, and I pay attention. I don't really care if it's a 61.8 or 38.2 or 50% or 75% or 25. It doesn't matter to me. You can debate that all we want. What I'm looking for is several different swings overlapping and coming close within proximity with each other, and that makes a measured move for me. There's no science behind it. I'm not using Gartley patterns or anything like that, or Elliott wave or anything like that. I don't know much about that stuff, but. That's what I'm using when I have no auction details. There's no composite to work off of. I project prices this way. And so very little to project, though, for today's session as we are trading higher. But this is what we did yesterday, pretty much in line with what was expected. The prior day, we left a gap. There's a new gap zone. If you get the master levels, these are free if you have IRT. Also, you can get them on Sierra and others. you'll see that there's a gap zone that started at 29.1875 to 26.25, and we didn't breach this gap zone once the IB was put in. We didn't attempt to breach it, so we ended up holding that statistic I talked about yesterday. Today we pushed to 29.4550 on the overnight. So let's take a look at that. The overnight session yesterday was clearly bullish, and the overnight session during the Asian session had pushed higher. Yesterday was absolutely another trend day, and we pushed higher as we would expect, and then we pulled back on the European Open. Here's the European Open right in here somewhere. We pushed a little bit. We pulled back into the prior day's range, almost to the point of control, and now we're holding steady. The profile shows a pretty boxy pattern. There's no real consensus on price on the overnight session. Not much we can glean from yesterday's from the overnight session for today, other than the fact that it's very boxy. There's really no two sides are battling it through the range. I'm going to keep this session as short as I can because I just I'm really worn out. I feel really worn out right now. I'm exhausted. I may be coming down with something. I don't know. So I'm going to do this quickly. I want to remind you, of course, today is Like Friday. Please find and hit the like button. You may need to log into YouTube to find that button. If you're looking at this embedded in some other website or something, find the YouTube button at the bottom right. Click on it. Once you're in YouTube, hit the thumbs up. I'd appreciate it. For today, bearing in mind that we had a rally day yesterday. Remember, we had a rally day on Tuesday. We had a rest day Wednesday. We had a gap up rally, gap and run, initiative trading, initiative action yesterday. And then today is expected to, we expect to have a balanced day. And so this morning, as we open up here, 20 minutes from the open, we've got, again, quad witching expiration of options in about 20 minutes. You should be trading, absolutely should be trading the December contract now. And I'm looking for a response. So we're likely to fall back into yesterday's range before the open. If not, then I'm looking for to at least poke the high, and I'm looking for a response into the point of control, and as far down as 33, and I'm looking for this to go sideways into the close today. So I'm not looking for a continuation higher this morning. I'm really looking for the high to be taken out like we would often expect on a legit, well-defined trend day. And then I'm expecting it to fall back into range. The secondary scenario is we fall back into range. Then we have an impulse up. An impulse up that consolidates and then stays higher but goes sideways as well. We are in new all-time high territory. Again, the probability of, just like I said yesterday, an open drive, open test drive, and so on is elevated because there's no balance in the past here. There's likely to be strong price discovery, which is what we had yesterday, and now we're likely to get a rest. But don't sit here and try to fade every move expecting balance or expecting mean reversion type of trade. It may start running again, especially if there is news. So from a technical perspective, and where we are in the narrative and the context, the expectation is we're likely to fall back in and just balance out. It may not get as far as 33. Don't be disappointed with a tight range and just a lot of chop today is what I'm saying. like I said, I'm really, really tired. I'm going to leave you with that. Normally, I'd talk about making sure you're focusing on your goals and so on, but you've heard it 100 times before. Good luck. Have a great and safe weekend. I'll catch you on Monday morning, nice and fresh. Take care.